Hello and welcome to No Spin. I'm Nidhi Razdan. The falling rupee is our big focus tonight. Why is this happening? What does it mean for you and me? Today, the rupee hit another all-time low of 83.3 to the dollar before recovering a bit. And very simply, a falling rupee means that our imports become more expensive, like fruits, vegetables, edible oil, etc. All of that means, in turn, that prices of many everyday items simply go up for us. It's already happening. For many Indian students who are studying abroad, this is a big nightmare because they end up spending much more. The rupee has lost over 11% of its value in the past year. Saving the rupee has also cost India $100 billion in forex reserves in the last year. That's the sharpest decline in 1 year. But India is not alone. There are other currencies like the British pound and the Japanese yen, which have also fallen against a strengthening dollar. At home, though, the opposition has attacked the government sharply over the rupee's fall, reminding them of their jibes when the BJP was in opposition.
जिस प्रकार से डॉलर मजबूत होता जा रहा है, रुपया कमजोर होता जा रहा है, विश्व व्यापार में भारत टिक नहीं पाएगा। और मैंने साफ मांग की है, ये सिर्फ आर्थिक कारणों से नहीं हुआ है, ये आपकी भ्रष्ट राजनीति जो चली है दिल्ली से, उसका इसके अंदर बहुत बड़ा रोल है। बहुत गंभीरता से आरोप लगा रहा हूं। अब आज देखिए आप, रुपये की कीमत जिस तेजी से गिर रही है, और कभी-कभी तो लगता है कि दिल्ली सरकार और रुपये के बीच में कंपटीशन चल रहा है। किसकी आबरू तेजी से गिरती चली जा रही है, कौन आगे जाएगा, इसकी कंपटीशन चल रही है। हमारे देश का रुपया लुढ़क रहा है, रुपये की कीमत गिरती चली जा रही है। जब अटल जी की सरकार थी तो रुपया 40-42 रुपए की ताकत रखता था $1 के सामने, और ये वर्तमान अर्थशास्त्रियों की सरकार में डॉलर के सामने रुपया गिरता गिरता 60, कभी 62, कभी 65, कभी 67 गिरता ही चला गया।
Well, that's when the Prime Minister was not the Prime Minister, and that's what he was saying about a falling rupee during Dr. Manmohan Singh's time. The Finance Minister, though, today's Finance Minister, Nirmala Sitharaman, she's been getting a lot of flack for saying this, that the rupee isn't falling, but the dollar is strengthening.
First of all, I would look at it as not rupee sliding. I will look at it as dollar strengthening incessantly. So obviously all other currencies are performing against a strengthening dollar.
Well, joining us first on the program tonight, Dr. Amit Mitra, former Finance Minister of Bengal, advisor to Chief Minister Mamata Banerjee, and of course senior economist. Dr. Mitra, just to ask you, the government argues that India isn't alone in this, and they're right, because we do see other currencies also weakening against a strong dollar. It's happening with the pound, it's happening with the yen. And the rupee is not doing too badly against other currencies, except for the dollar, of course. So should you not see this beyond the realm of domestic politics at the moment?
I think what's important, Nidhi, is that the performance of the rupee, contrary to what the Union Finance Minister may have said, has been one of the worst performers among emerging markets. This nobody is talking about. Number two, it has already fallen to the 4th position in Asia. So these are facts that must be put on the table. And I must say that when then Chief Minister of Gujarat was speaking, rupee had fallen to 68 rupees a dollar. Today it is 83 rupees a dollar, but we see a stony silence on the part of the Honorable Prime Minister. And he even said at that time, that directionless leadership. He said inflation is not being handled. Today, inflation is hitting the roof. So I think what is interesting is for us to look at the common person as to what all this means for them.
What does it mean? I briefly talked about it in the beginning. It basically means higher prices for all of us, doesn't it?
Yes, what it really means is when the rupee falls, all kinds of imports become much more expensive. Now, what are these kinds of imports that affect us? Petrol and diesel, right away, which means it translates into accelerating process of inflation vis-a-vis transportation. Fertilizer for the farmers. And let's go to components. You see, what happens is component prices significantly go up in terms of imports. Then what happens? Mobile phones, TVs, electrical goods, they all go up. And then comes the worst part of the all, the price inflation on food items in India in September has gone up by 8.6%. You know what that means? Vegetable prices up by 18%, spices by 17%, cereals by 11.5%, up. And RBI knew this. They had said in April that if the rupee goes beyond 76 rupees a dollar, every 5% fall will mean inflationary pressure on the economy by 20 basis points. They knew it in April. So
can I ask what you would suggest that they do at this point? They've been trying to sell dollars. We've seen forex reserves are down, $100 billion in 1 year. That's the sharpest decline ever since records have been kept of this. So what else would you advise the government to do at this point?
You see, let us add to this the fact that the economy, the macroeconomic condition, is extremely dangerous. This people are not talking about. For example, in Index of Industrial Production, IIP, first time has shown a negative 0.8%, dangerous sign, red line. Exports, you would expect exports to bounce up because rupee falls, it becomes easier to export. Export has shrunk by 3.52% in the month of September. So what's going on? It's not just the fall of the rupee, not just inflation, but unemployment that you see is all connected to Index of Industrial Production falling to a negative level, exports not growing, which is a natural consequence of rupee becoming weaker. Exporters have great fun, but they're not. So I think there is a bigger macroeconomic play here. And what the government did by following the supply side policy, which is cutting corporate taxes, didn't have the effect of investments. So let us bring in a bigger picture to this, that we are in serious condition in the economy from the data that I've presented to you. Now you talk of solutions. Foreign direct investment being brought to India will help the rupee from not falling. Is it going to happen? No. Today, in America, the yield on the federal bonds is about 4%. So investments are rushing in that direction. Second is foreign portfolio investments in our stock market. Do you know that 30 billion US dollars were withdrawn during this year? So they're gone. Now, fourth is NRIs. You know, NRIs bring us a lot of foreign currency. Now, if there's a high bond yield in the United States, they would rather stay in the United States. So what we need is a comprehensive macroeconomic policy of both fiscal and monetary policy.
Okay, so what you're saying is it can't be a band-aid that just looks at one aspect of it, which is the falling rupee, but something, much more comprehensive than that. All right, Dr. Amit Mitra, I have to leave it there. But thank you for your perspective, on this important story. Let me go across to Dr. Anshul Avijit from the Congress Party joining us tonight. Professor Govardhan Das of the BJP is with us as well. We'll be also joined shortly by Dr. Sajid Chinoy, Chief Indian Economist with JP Morgan and member of the Prime Minister's Advisory Council on the economy. He'll be joining us in just the next few minutes. But Professor Das, just wanted to read out to you a tweet by Mr. Chidambaram that was put out just a short while ago, where he's talked about the declining rupee and suggested that the Prime Minister call a closed-door meeting of former RBI governors. He's talked about and former economists like an economist like Dr. Raghuram Rajan, Y.V. Reddy, C. Rangarajan, Dr. Montek Singh Ahluwalia, to consider the next steps, and of course have the governor of the current RBI governor and the finance minister present there as well. So in a sense, reach out to take some advice. What would you say to that?
Okay, Nidhi, good evening, and good evening, my fellow panelists. There are 3 or 4 points I would like to make. Number one, yes, dollar is falling. We got independence in 1947, when the dollar was ₹4 per dollar. Since then, they tell me a year when the dollar values been negative. Since then, always is falling. Today is 82. I agree. Okay. So this is not that the first time is rupee is falling against dollar. It's a continuous process is happening. My second point is not that devaluation of rupees is not only rupees. If you correctly showed all the countries, in fact, the strongest economy in Japan, even euro, Chinese yen, Australian dollar, pound, everybody is falling. It's not the only rupees. My second point. Third point is when the Congress is all, jumping like a headless chicken. This is, when the Manmohan Singh resumed his office in 2009, and then when he left the office, that the increase was dollar value increased by 37%. And till date, when the Honorable Prime Minister Modi resumed office, until date is only 32% increase. And the fourth point is, see, we have gone through this is most toughest time. During pandemic, COVID-19 pandemic, and also Russia, the Ukraine war. And actually, we have done phenomenally good, and that we placed ourselves in world map. So our economy is
okay. So you're okay. All right. Let me just get Dr. Anshul Abhijit. I'm coming back to you because there's only 2 of you, so I'm definitely coming back to you.
Only another point. Yeah. One point. Dr. Amit Mitra was lecturing here. He was talking about all these values. He was the advisor to the Chief Minister Mamata Banerjee. What his advice did? All the industrialization came back in West Bengal. Actually, West Bengal economy is going down like anything. Is any employment generated? Nothing.
Dr.
Lecturing
Anshul
all the good on TV, but in reality, they completely failed.
All right, but you're not answering my question, Professor Das, that what about Mr. Chidambaram's suggestion that the Prime Minister call ex-RBI governors?
This is what the novelty of our Honorable Prime Minister. He is taking all the measures. He is trying to solve all the problems. He is for the pro-country. Whereas if you look at
should he call a meeting like this, as Mr. Chidambaram suggests, period, yes or no?
The highest dollar decline happened in his period of time is 37%.
Professor Das,
go back and calculate.
The rupee is at an all-time low against the dollar. Thoda zyada ho gaya, now to say
every day.
Let's not. Manmohan Singh has been gone now. It's 8 years, coming on to 9 years. But Dr. Anshul Abhijit, please step in here. The point that the government is making, Professor Das, I have to let him speak, please. Dr. Anshul Abhijit, the point that I have to lower the mic. I'm really sorry. You have to let the other panelists speak. You have to. There's just the 2 of you. Dr. Abhijit, what the government keeps saying, and it's true, is that it's not just the rupee. It's happening to a lot of other currencies. So why is the criticism singled out for just the Indian rupee?
Because, Nidhi, that's absolutely a false equivalence. I mean, you compare the rupee, the falling rupee, to the yen, to the UK pound, to the euros. I mean, these are the countries whose per capita GDP is about 20 times the size of ours. Their population is much smaller. These are developed countries of the world. We have the largest number of poor people in the world. There is absolutely no basis for a comparison here. And that is what the problem with the finance minister is. She refuses to acknowledge that there is a problem. if you don't acknowledge that there is a problem, and hence Mr. Chidambaram's tweet here that you should have a consultation in which you get everyone on board and first of all acknowledge there is a problem. She keeps blaming all our economic woes, and there are multiple of them. This is a perfect storm. There's a falling rupee, there is soaring inflation, there is unemployment at record levels, there is poverty, there is hunger. There is stagflation because there is no growth and there is joblessness at the same time. So we've been assaulted from all sides. And, the structural flaws in our economy have actually come through here. And therefore, Dr. Mitra is absolutely right that it needs an integrated approach, and the room to maneuver by this government, because they botched up so badly, is so limited that they have to get everybody on experience and talk these things through. They have to acknowledge that there is a problem here. Now, the biggest problem and concern of the fact here is that over the last 1 year, you have lost $110 billion in kind of managing your rupee, or because of the current account deficit, which is now at 2.8%. Because the exports are getting less and less, the imports are getting more and more. The trade deficit keeps increasing to over 8%. There is a current account deficit, which threatens to be almost 4% now. So that to do that, you've lost a lot of money, and that is depleting very, very fast. That is the major concern now, because first of all, you had money for about 15 months.
Anshul Avijit, can I ask you, why does the IMF then say that India is still a bright spot in the world at a time when you're staring at the possibility of a global recession, if you're saying that the macroeconomic situation is so bad?
No, so I'll tell you what is happening here. All the major rating agencies and banks of the world have cut India's GDP estimates by even 1%, by much more. What the government is very keen on projecting all the time is high frequency data, which it completely relies on all the time. Revenue projections, that the fact that taxes are a lot. Of course, the taxes are a lot because the companies are earning a lot more profit. The companies are earning a lot more profit because this is a profit-led recovery. Whatever recovery there has been in the economy has been a profit-led recovery because the companies have been benefiting from low interest rates. They've been bolstering their, by deleveraging, they've been bolstering or making their balance sheets more robust. And therefore, they've been offloading their debts and they've increasing their profits. So if you increase their profits, the government gets more revenue. This is all high-frequency data which the government keeps showing. It has absolutely no data on poverty, on World Bank, because the World Bank came up with the data and the government had no answer on unemployment. On the informal sector,
we tend to question the methodology of everything that we don't agree with. But quickly, Professor Das, why is the Prime Minister silent on the rupee now? जब चीफ मिनिस्टर थे तब तो बोलते थे. We played it out.
This is now this year, the last couple of years, what we have gone through. Of course, this not only the India, is everywhere is going down, and the government is doing their best. What the best measure they can do, they are doing that. They are trying to fix it. When the Congress spokesperson comes and there's a government doing worst and this and that, can he explain why the Dr. Manmohan Singh's time that
actually we're not in Dr. Manmohan Singh's time. I'm asking you, why doesn't our government acknowledge that there is a problem? Why doesn't the Prime Minister of India talk about what's happening with the rupee? Let us not talk about Manmohan Singh. He was voted out.
It's not that today only the dollar value, rupee value.
But now it's at an all-time low. So we are concerned.
Since 1947 till today, every time is all-time low. It's not today.
Okay, so there's no problem
compare like this.
I'm going to go across to Sajid Chinoy, who is in fact a member of the Prime Minister's Economic Advisory Council, and let him sort of take us through this. Sajid Chinoy, thank you so much for joining us. The finance minister, of course, famously said now that it's not the rupee falling, but the dollar strengthening, and that all countries are being impacted. What did you think about that statement? Many would say she's technically correct.
Well, Nidhi, it is, because we need to look at the global context here. The genesis of all these pressures that we see around the world is that inflation in the US is very elevated, and the US Fed is on course to taking interest rates there to 5%. The last time we saw these levels was 2006, 2007, much beyond what anybody expected 6 months ago or a year ago. What that does is when US interest rates go up, it sucks capital from all countries in the world, advanced economies and emerging markets. And therefore, the US dollar is at its highest level since 2002, right? And what this has done is put pressure on all emerging market and advanced economy currencies. The euro is at the lowest level in 20 years, the British pound in many decades, the Chinese yuan in 15 years. So yes, this is a story of broad dollar strength, and India, cannot escape these pressures. And so rupee depreciation is reflecting the fact that all currencies around the world, advanced economies and emerging markets, will remain under pressure as long as capital is flowing back to the US and the dollar is strengthening.
Well, Sajid Chinoy, the government says the rupee is falling because these are, of course, unusual times. There is a war, there are fears of a recession, and that it's essentially international factors that are driving it. Is that the case, or are there domestic factors too?
No, these are largely global factors. And the factors is we're seeing a trifecta like we haven't seen before. You're seeing three things happen globally, which is affecting India and other economies. One is, as I mentioned, coordinated monetary tightening around the world. So advanced economy interest rates are going up. The second is the dollar itself is quite stronger. And the third, which affects India in particular as a commodity importer, is that oil prices and commodity prices, though lower than a few months ago, are still uncomfortably elevated. Typically, Nidhi, we tend to benefit from this because there's a natural hedge. When the dollar is stronger, oil tends to be weaker. When oil is high, the dollar tends to be weaker. And India gets a natural hedge on the current account and the capital account. Now we're in this very uncomfortable situation where high oil prices have caused the current account to widen, and a stronger dollar is putting pressure on the capital account. So I would argue these are largely driven by global forces. In fact, I'm going to make the case. I've been arguing for a weaker rupee for the last 6 months, because in a world in which other currencies are weakening, you don't want to be too strong. The rupee is down 10% year to date. The Chinese yuan is down about 12%. So is the euro, right? The yen is down 22%. The pound is down 16%. Why is that important? Because if other currencies weaken more and the rupee doesn't move, we become strong relative to those countries, and that hurts our exports. That makes imports cheaper, and therefore actually hurts growth and job creation in India. So a weaker rupee in a calibrated manner is not a bad thing. It's the shock absorber to global shocks, and it's necessary to ensure competitiveness vis-a-vis other countries.
Well, the other concern, of course, is that India's forex reserves are falling because the RBI is selling dollars to save the rupee. It's down more than $100 billion, but the rupee is still falling. Are there other steps that can be taken then to save the rupee?
Yes, so I would say that there are three instruments that countries like India and emerging markets have at their disposal to deal with this shock. One, as you pointed out, is we've got this war chest of reserves, and the RBI has primarily been drawing upon that. But because the shock could play out for many months and many quarters, we need to be prudent about how many reserves we draw down and make sure we have enough of a buffer stock to last us over the next couple of years if the shock perpetuates. Which is precisely why, apart from reserves, the rupee has to become a shock absorber, right? So you can't only rely on one instrument. You want three things to be working in tandem. You run some reserves down, you let the rupee become a little bit of the adjustment mechanism, and interest rates, unfortunately, will have to rise because you don't want the interest rate differential vis-a-vis the US to go too narrow. So these are uncomfortable choices to make, but I would argue prudent macro management would mean you rely on all three instruments. Interest rates gradually move up, the rupee gradually depreciates, and you use some reserves, but make sure you have enough of a buffer stock for the next couple of years.
Finally, Sajid Chinoy, what's your prediction? How low could the rupee go by the end of this year?
Indeed, it's impossible to predict because it depends entirely on what happens in the US. And I would go so far as to say what happens in the US labor market. If US inflation doesn't come down, we've had two really ugly prints in the last 2 months, and the Fed continues to raise rates, deep into the summer of next year. We have to be realistic here that these pressures will continue, and therefore we have to be prudent in the choice of instruments we use. If we get lucky and the labor market in the US begins to soften, inflation unexpectedly comes off, and the Fed pivots, then you'll see the exact opposite phenomenon. Then capital flows may rush back to emerging markets, and we'll have the other problem where the rupee is strengthening. So a lot of this depends on global factors. let me just emphasize this. We had the UK Prime Minister resign earlier today. I think the key in this very hostile global environment is hunker down and focus on macroeconomic stability. Now is not the time to be heroic. Now is the time to just ensure inflation is under control, the fiscal is brought under control, the current account deficit is kept under control. And once the storm passes, then we can kind of continue, refocus on growth prospect.
Well, Sajid Chinoy, thanks very much for that perspective. Sajid Chinoy there, member of the Prime Minister's Economic Advisory Council, on why the rupee is falling. It's a story we'll continue to track closely. For now, that's it. Good night.